Markets continue to inch higher. Nifty nears 21,700 mark. Sensex jumps over 600 points. Broader markets mirroring gains.
All sectoral indices in the green, barring media, IT and realty emerge as the top gainers, while Z drags Nifty media lower.
Sources say Z and Puneet Goenka are keen to close the merger, with good faith negotiations still going on. That's an NDTV Profit exclusive.
And a thumbs up coming in from OMCs after oil plunges as much as 4%, as Saudi price cuts counter Middle East worries.
Stellar rally in Adani Group stocks. Their total market cap hit 15.57 lakh crore rupees market cap.
Good afternoon, welcome. You're watching Market IQ here on NDTV Profit. I am Hersh Sayta, with me Smriti Chaudhary. Over the next half an hour, we'll keep you cued on what markets are up to. And at the moment, you're seeing a good bit of gains on the benchmark indices after a tough day of trade to start the week yesterday. Benchmark indices, the Nifty itself is up nearly 1% in trade. Definitely a positive day, and we're going from strength to strength, as you can see. It's a fairly steady graph through the day, except that initial blip that we saw at the start. Let's also have a look at the breadth of the market. The advance decline ratio strongly in favor of the advances, clearly demonstrating that there is a very good breadth with regard to buying which is happening across the board. Let's also have a look at the broader markets. Broader market indices also gaining largely in tandem or slightly lower than where the benchmarks are at. That's a bit of a change from what we've seen over the last week or so, where we've seen largely broader markets outperforming the Nifty. That's been the trend. That trend seems to be continuing, but slightly more, slight bit of outperformance shown by the benchmarks today. So that's definitely a positive. 43 of the Nifty 50 stocks in the green, and the breadth looking extremely strong. Let's quickly look at also where the sectoral indices are doing, except Nifty Media. Let's pull up Nifty Media, look at the constituents there. So outside of the Nifty Media, you're seeing pretty much all sectors in the green. Again, the breadth extremely strong, signaling that. Let's pull up the Nifty Media with regard to constituents, Z being the key drag there. But other than Sun as well as NDTV, you have pretty much all of the other constituents there in the red, and sharply in the red. Also, if I can quickly flag off some stocks which are buzzing, you have the likes of GMDC, which is up roughly 7% odd. Z Entertainment, of course, down roughly 8% or thereabouts. IRB Infra up 11% on the back of December numbers. Fino Payment up 3%. Gensol Engineering up 3%. Those are some of the stocks which are buzzing specifically. Smriti.
Right. You talked about Z Media, and there's a lot of weakness in the stock today, but we have the latest update on that Z-Sony deal. Sources have told NDTV Profit that good faith negotiations are still on. This comes after a Bloomberg report that claimed that Sony is planning to call off the $10 billion deal. We have Tamanna joining us with more on that.
So sources close to the deal indicate that we've not yet heard the last on the Z-Sony saga. Now, this is an important clarification coming in just a day after a Bloomberg story reported that Sony is looking to exit that merger deal. Just for context, the deadline of those negotiations end on the 20th of this month. That is after an extension in place. And because of that Bloomberg report, the stock has been hit quite badly. Now, what are we learning? Our sources are telling us that good faith negotiations are on, that Puneet Goenka and Z are keen to go ahead with the merger. There is also a clarification that it is not as if Puneet Goenka is vying for any specific chair or position, but wants to see what the shareholders have approved be implemented in the letter and spirit, which effectively is him at the helm. That continues to be an issue with Sony. There is no doubt about that. The push and pull on the leadership question continues, but the negotiations and conversations are still on as we speak. And this becomes crucial because if you go by the Bloomberg story that says Sony is pretty much decided is going to call off the deal, why are they still having a conversation? So that conversation is very much on. Another point to sort of add and keep in mind here, that if the deal is called off, it goes back to ground zero. So you have to go back to all the regulatory desks for approval. Once again, a long process which took about 2 years. You have to go back to the shareholders as well for an agreement, and then you move on from there. For Sony, walking away from Z is not the easiest thing to do right now, with competition really jumping up on this landscape. Remember, after Jio has taken over Disney Hotstar, it has become a behemoth, and to compete and survive in this market, Sony will need to shore up resources. So Z is a good deal for them. Even on the other side, in terms of Puneet Goenka, it's not going to be very easy for him to walk away from Sony. So it's a very tough negotiation on right now. We have to see which side blinks. But the long and short of it is we've not heard the last word on this yet.
Absolutely. But the last word ought to be heard before the 20th of January, Tamanna. And of course, we'll wait and watch as to how things play out going forward. But, you know, outside of Z, we had oil prices also slip in trade yesterday. Saudi Arabia cut its prices. What does this mean for India? And what does this mean for OMCs? Mihika is here to tell us exactly that.
Yes, so Saudi Arabia did cut its selling price on the February loaded Arab Light crude, and this was the lowest in 27 months, and the price was cut by $2. And this came after Saudi also cut the prices by $1.5 in December for the January loaded crude. Now, this move works well for India as well as the OMCs, as the country is actively trying to diversify its crude import mix amid a scenario where the Russian crude discounts that we once enjoyed are now fading. Now, Russia is the top supplier to India, and in the April to October period, it accounted for 34% of the crude import bill, while Iraq and Saudi Arabia accounted for 20 and 16% respectively. Now, India majorly turned to Russian crude because we enjoyed a good $20 discount in the start of February 2022, but the discounts from Jan to October 2023 have now narrowed by 14%. And so the petroleum minister has stated that India is happy to buy Russian crude, but only if it's at a discount. So India's crude import strategy is basically surrounded by price. So the Saudi Arabia cutting prices and Iraq being marginally higher than the Russian crude prices bode well for us, as India is focusing on diversifying its mix and, you know, focusing on a Middle Eastern suppliers more.
Right. Thank you, Mihika, for that. And time and again, the petroleum minister has talked about how they have no issues buying from Russia or anywhere else, and price being the biggest point. Now, moving on to Uber India, that posted a 54% year-on-year revenue growth in FY23. But the numbers are not driven by rides. My colleague Rishabh is joining us to explain the key factors that have driven Uber's revenue growth. Rishabh, talk to us about how the results are and what are the main highlights that came out of it.
That's right, Smriti. We have our hands on Uber India's financials for FY23. What's very, very interesting is that though revenue has increased about 54%, it has reported a 2,666 crore revenue. The largest revenue head was not its mobility rides. The largest revenue heads was, in fact, the IT or support services that it provided to its parent company in the US and in Netherlands. So that made up about 1,977 crores of its entire revenue, while rides made up only about 679 crores for the revenue it made. It continued to be a loss-making entity. It posted a loss of about 311 crores. That's comparable to its FY22 loss that was about 200 crores as well. Its expenses have also ballooned to about 3,145 crores from 2,145 crores in FY22. What's also interesting is that the listed entity in the US, Uber Inc., has turned profitable. That has posted about 2 consecutive quarters of profit, but the India entity continues to languish in what is turning out to be a very competitive market for Uber, with Ola, with new challenges like Rapido cabs. We have InDrive and now BlueSmart as well.
Thank you, Rishabh, for that. But it's time to slip into a short break, but more updates on the other side. Stay tuned.
Welcome back. You're watching Market IQ on NDTV Profit. Quickly addressing the news that's flashing at the bottom of your screen. We had Axis Bank, which had invoked pledge of shares from Karvi stockbrokers. The SAT had, the SEBI had placed an order, or rather passed an order in favor of Karvi, which was reversed by the SAT. It seems that that order is now on hold, as both SEBI as well as Karvi seem to have gone to the Supreme Court. Of course, we await more details on that one. It's against Axis Bank, but doesn't seem to be extremely material. But quickly moving on, the Vibrant Gujarat Summit 2024 is set to be inaugurated by the Prime Minister tomorrow. NDTV's Vasudha Venugopal gets us all the details of the roadshow prior to the event in Ahmedabad. Vasudha, how are preparations looking? Talk to us.
It's going to be two tightly packed days for Gujaratis, and also I think this event is of great significance for the people of the country because, this is a very different, vibrant Gujarat. It comes very close to the Lok Sabha elections of 2024. Prime Minister Narendra Modi, it's vibrant Gujarat is seen as his brainchild, something that he conceptualized in 2003, and he wanted to project his state as the best destination for not just investments and business, but also policy making. And this is his way of showing the country that, 20 years to vibrant Gujarat, the platform has risen to become this unique, meeting of stakeholders and policy makers. So all of that is going to happen today and tomorrow. What I understand is that the Prime Minister will inaugurate the Vibrant Gujarat Trade Show in the afternoon. Remember that the focus of this is going to be emerging technology. So there's a lot of talk about e-mobility, fintech, and also high-tech manufacturing. And of course, a lot about green hydrogen and green ammonia. So that whole sustainable energy is something that remains a focus area of Vibrant Gujarat this time. What I understand is that after that inauguration, he is, of course, moving to the airport to receive the president of UAE, and that Mohammed bin Zayed. And, he has already posted on Twitter that, it's like welcoming his brother home. And remember that in July 2023, the Prime Minister did make a visit to UAE. And remember that the diplomatic relations between the two countries has only risen to a historic high in the last few years. He was the first Prime Minister in 35 years to visit UAE into 2015. After that, he has visited the country almost 5 times. And India-UAE relations have gone from just being, India being the state that buys petrol. It's gone to talking about energy and food security. So there's been a great development on that front. And then we also saw the inauguration, or not the announcement of the India-Middle East-Europe corridor. And of course, the grouping of BRICS being expanded to include UAE. And that also came with India's support. We saw, during G20 presidency of India, UAE supported India very much. So all of this has happened in the last few years. And today is going to be a culmination of sorts. That roadshow is being, organized in the honor of the UAE president. And remember that this is also a diplomatic message that India is sending out to the world, even as the geopolitical tensions rise between Israel and Hamas. This is India's way of reaching out to the international audience as well. Sure. So I did speak to Rahul Gupta, who is the managing director of Gujarat Industrial Development Corporation, a short while ago, to understand how.
Right. Quick breaking news that's flashing on the bottom of your screen. Z has issued a clarification suggesting that the $10 billion deal with Sony is not called off, that some of these, the news which has been going around is factually incorrect, is what the company has clarified now in an exchange filing. This is quite big, Smriti, because we've seen the Z stock tank nearly 10+%, or rather 10%, and currently was languishing at around 8.5%. Now you can see a bit of a recovery on the stock. The stock is down just about 6%. So a 2% recovery, Smriti, in the stock price as well on the back of that news.
Right. And as the Manna just talked about how Z and Puneet Goenka are both keen on closing the merger. And if it doesn't close, analysts believe it's a lose-lose situation for both the entities. But moving on to government spending on major subsidies in the upcoming fiscal, 2025 is seen as flattish, as commodity prices are expected to remain benign through most of the upcoming fiscal. This is according to The Economist. My colleague Janani will join us soon and will talk to us about it. But before that, how is Z performing as of now?
Yeah, let's quickly have a look at the Z graph as to exactly what the stock is doing, because it was well beaten in trade early today. It was trading in the 250 odd range. That seems to be there. You see a small spike seen in the stock. But of course, it seems that somewhere there isn't enough conviction despite this Z clarification. So the stock hasn't rebounded fully on the back of this clarification coming out from Z. In fact, and I quote, We would like to clarify that the above mentioned article is baseless and factually incorrect, which is the termination of the $10 billion deal with Z.
Yeah, they also add that they're committed to the merger with Sony and is continuing to work towards a successful closure of the proposed merger. This is from the exchange filing by Z. We have Tamanna joining us on more details on that. Tamanna, now the official word is out.
Yeah. In fact, the story that we broke on NDTV Profit a couple of hours ago has been confirmed in every sense by this exchange filing. Essentially, what is being communicated is that the conversations are on. And just to add a few more layers for it, the communication that Sony is intending to call off the deal that Bloomberg reported has not been received in any sense by the other party. Good faith negotiations are still on. And that's what we've reported. That's what echoes what Z is coming out and saying. What they're essentially saying is that the conversations are still very much on. They have till the 20th to come to a finality. Nothing is off the table at this point is what we gather. Remember, the contention at the end of the day is about who will lead the merged entity. And while Z and Puneet Goenka are still in that negotiation round where their position is very clear, this is what the shareholders have agreed to. So let's go ahead with this with Puneet Goenka at the helm. It is looking like an obstacle for Sony. Is it a deal breaker where at the end of the day they'll walk away? Well, if they had to, that probably may have happened by now. But look at what has been done so far. Extension has been given for the negotiations. That good faith negotiation period is on. It continues till the 20th. There has been no official response from Sony since the Bloomberg story came out yesterday. And now you have Z officially writing to the exchanges and saying that the article that has been cited, the context to this is that the exchanges have asked Z for a clarification, and they've quoted an article by the economictimes.com that reproduced what the Bloomberg story said, saying that Sony is going to walk away from the deal. So they've called that article and that story completely factually incorrect. You've seen the stock getting hammered, but you're seeing some of those losses being paired right now as far as Z is concerned because of their clarification to the exchanges. And you have to understand the context. It's going to be a tough deal for both of them to walk away from.
Absolutely, Tamanna. Plenty of flip-flops that have happened over the last 6 to 8 months on this one. Let's hope that over the next 10 days, there's a bit of a conclusion of sorts on what's happening with regard to the Z-Sony merger. But thank you so much for that and for breaking that news a couple of hours back, broken by NDTV Profit and confirmed now by Z that the company is committed to merge with Sony and is continuing to work towards a successful closure of the proposed merger. You can see the spike on the stock price now, evidently clear, 4% down only now, Z in trade versus the almost 10% drop that we saw at the bottom for the day. But that's where Z is concerned. Quickly moving on to some of the other ones which are also in focus. We had some life insurance numbers which also came out, and we had the likes of an SBI Life growing at 20% for the month of December. If we can have the stock price of that one, it's up around 2% in trade as we speak. So that's one counter which is seeing some bit of positivity, Smriti.
Right. But moving on, we have in the recent light of development projects in Ayodhya, our colleague Pallavi Nahata had the chance to speak to the tourism minister of UP, Javeer Singh. Listen into a slice of that conversation.
देखिए, राम भारत की संस्कृति का प्रतीक है। भगवान श्री राम हमारी भारत की पहचान है, आस्था का सबसे बड़ा विषय है। सनातन संस्कृति को संरक्षित संवर्धित करना यह सरकार का दायित्व है। और आज सौभाग्य है देश में कि आदरणीय मोदी के नेतृत्व में और उत्तर प्रदेश में आदरणीय योगी जी के नेतृत्व में हम अपनी सांस्कृतिक विरासत को आगे बढ़ाते हुए देश और प्रदेश को विकास के रास्ते पर तेज गति से बढ़ाने में अपना मिशन आगे किए हुए हैं। दुर्भाग्य रहा कि तमाम ऐसे लोग आज़ादी के बाद आए, ऐसे लोग के हाथ में सत्ता रही, जिन लोगों ने भगवान श्री राम के वजूद को नकारने का काम करते रहे। सौभाग्य है कि आज वो क्षण आया कि भारतीय संस्कृति को सम्मान देते हुए, अपनी विरासत को मजबूत करते हुए, अपनी परंपराओं को सम्मान देते हुए हमारी सरकारें आगे बढ़ रही हैं। और ये भी सौभाग्य है कि 500 वर्षों से अधिक के लंबे समय के त्याग, तपस्या, बलिदान और त्याग के बाद भगवान श्री राम जी का भव्य, दिव्य, अलौकिक और नव्य मंदिर आज देश और दुनिया के सामने प्रस्तुत हुआ है। तारीख भी तय है, 22 तारीख को रामलला जी अपने घर में प्राण प्रतिष्ठित होंगे। माननीय प्रधानमंत्री जी के कर कमलों से सारा कार्यक्रम संपन्न होगा। और मैं समझता हूँ जिस प्रकार का उत्साह न सिर्फ अकेले उत्तर प्रदेश में, न सिर्फ पूरे हिंदुस्तान में, बल्कि देश और दुनिया में जितने भी सनातन संस्कृति के मानने वाले लोग हैं, आस्थावान लोग हैं, वो सब उस पल का बेसब्री से इंतजार कर रहे हैं। वो इस पल के साक्षी बनना चाहते हैं और अपने को धन्य महसूस कर रहे हैं कि उनके जीवन काल में ये क्षण आया है कि भगवान रामलला का ये प्राण प्रतिष्ठा का कार्यक्रम संपन्न हो रहा है। तो अपने को गौरवान्वित महसूस कर रहे हैं, अपने को धन्य महसूस कर रहे हैं और लोग आ तो रहे हैं इस क्षण से जुड़ने के लिए, प्रत्यक्ष और अप्रत्यक्ष रूप से। चाहे वो जो लाइव प्रसारण होगा उसको देखने के लिए तमाम लोग अपनी व्यवस्था कर रहे हैं। ये अन्य अन्य तरीके से हम दीपोत्सव, भगवान राम के नाम का एक दिया जलाने के लिए आ तो रहे, दीपावली का पर्व मनाने के लिए आ तो रहे। गांव-गांव मंदिरों में लोग तैयारी कर रहे हैं कि भजन कीर्तन करेंगे, रामलीला का गायन करेंगे, रामलीला का मंचन करेंगे, हनुमान चालीसा का पाठ करेंगे। स्वतः प्रेरणा।
Right, that's all we have for you on Market IQ for today. From Smriti, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit for more market action.
Welcome. You're watching the Mutual Fund Show. I'm Tamanna Inamdar, and today we're talking about a new fund which has launched just a few days ago. That's the Sundaram Multi-Asset Allocation Fund. It's coming at a time when multi-asset allocation funds are definitely in vogue. They've seen great interest in the year gone by and continue to be some of the top performers and attractors of fund. The idea is fairly simple. You hedge your bets in a sense. So along with a focus on equity, you have gold and fixed income too. What makes this one different, or what is the purpose or focus of this one? To speak more on it, I'm joined now by Mr. Sunil Subramaniam. He is Managing Director of Sundaram Mutual. That's the AMC, of course, that is launching the fund. Mr. Subramaniam, thank you so much for joining us and welcome to NDTV Profit. Great to have you here.
Hi, great to be here back on NDTV Profit.
All right, let's begin and get straight to it. Let's start by talking about this particular multi-asset allocation fund. Why a multi-asset allocation fund, and why at this point, when equities have performed phenomenally well, do you think they will continue to do so, or is this you looking at sort of risks increasing in the year to come?
So I think, first of all, this is an all-weather fund. So it's not that the timing at this particular time makes a difference, and I'll explain that in the next few minutes. So it's an all-weather fund. Why this launch at this time, and you've seen many other AMCs launch, is because in the finance bill last year, the taxation for commodity ETFs and debts was, indexation benefit was effectively removed. So any investor looking to hedge his equity risk with either debt or commodities could not do that in a tax efficient way. So multi-asset allocation funds, which can give you either debt-based taxation or equity-based taxation depending on the structure, started getting popular with investors and with distributors. So what Sundaram is planning to do is to launch an equity-oriented fund, which means that even within the multi-asset fund, we would have 65% in equities at all times. So thereby we impart the benefit of equity taxation. The second is that though the name is multi-asset allocation, we propose to make it as a fixed asset allocation, wherein we will keep the fixed income piece at 10% at all times. The reason for that is there are enough options available through aggressive hybrids, balanced advantage funds, where debt as a component to hedge the risk are available. But what our fund seeks to do is within the commodity space to maximize it, and within commodities we have chosen to specifically use only gold. At no time in this fund will have any other commodity other than gold. Now that's a very clear-cut demarcation from all other multi-asset allocation funds, because they tend to look at it saying we will choose the commodity based on our view, including overseas securities. We are not saying anything like that. We are saying our focus is clearly on gold. Now what is the logic of this gold? And we will keep gold at the maximum permitted 25% at all times. So these two significant decisions make our fund very different. And the logic comes from a very, very simple fact that gold is the long-term shock absorber for portfolios, because not only does it perform well when equities doesn't, it tends to actually deliver very good returns when equity is having negative returns. Now, debt generally varies between 6 to 8. So if you have shocks in the market, equity gives you negative, debt at least gives you 6 to 8. But with gold, it very often gives you double-digit returns when equity is correcting. That's one aspect. The second aspect, being an Indian and investing in gold, you get the benefit of currency depreciation, because, you know, over a long time, 3 to 4% is the average currency depreciation, and gold inherently carries that. So if you look at the rolling returns of gold as a standalone asset class through the MCX Gold Price Index over the last 18 years, gold has delivered an average of somewhere between 11 to 12% annualized as a return to the investor. So clearly, compared to debt and arbitrage, if you hold for the long term, there is an additional value of returns that gold in the past has delivered. We know that past performance cannot be predicted for the future, but since we use the rolling returns methodology to arrive at this, we feel that is fairly consistent in terms of its approach. So I think that's what differentiates this fund, and it's not that it's being launched because we feel equities are overvalued. We believe, given the inherent nature of gold to do well when equities doesn't, every equity investor in India should have gold in his portfolio. And hitherto, that was possible through gold ETFs directly by investors, but with the indexation benefit going away, multi-asset with gold is the best way for an equity investor to participate in the market at all times, regardless of whether equity is doing well or not.
Sure. And I know you can't give any predictive absolute return figures or estimates. That is not permitted. But if you can give us a ballpark sense of how you expect this fund to perform, that's part one. And second part is fixed income at 10%. Is that a good idea in a year where you're going to definitely see interest rates coming down? The only question is when.
Okay, so let me answer the first one. So in terms of, we all do back testing, we launch new fund offers. So our benchmark index, right, is 65% Nifty 500 index, 25% the MCX gold price or the gold ETFs, and 10% is the Nifty short duration bond index. If you take the performance of this index as a backtesting over the last dozen or so years, I think the fund has delivered roughly about anywhere between 8, 9, 10% on a post-tax basis. You will make that as at least better than fixed deposits because you get 10% equity taxation, right? But there are times when the fund outperforms. There are times when equity doesn't do well, gold does well. And there are times when equity and gold both do well. So in that sense, it's a good asset class to mix. And if you see point-to-point returns over the last 1 year, it's been 17%. I know again that past performance should not be predicted, but last year has been a good year both for gold and for equities. So such events also do happen in the journey. And remember that an economy goes through business cycles, and when there is recovery and expansion, equities does well. When there's contraction, debt does well. But when there is a slowdown, it's gold that does the best. And to answer your second question on in a year, is this a good time to keep debt only at 10? Like I said, for investors, if they feel debt is a good asset class, there are enough products available in the market through which they can play. There are aggressive hybrids which are 70% equity, 30% debt. There are equity savings which have a little more than 35% in near debt. But that being said, I'd like to speak about this expected interest rate reduction. So I have a slightly contrarian view on this. I think during the current year, I do not expect a significant rate cut from the Reserve Bank in domestic terms. It is the Fed which is going through a massive rate cut drive. But remember, when the Fed hiked rates by 550 basis points, RBI raised it only by 250 basis points. So until Fed cuts it down by 300 basis points, there is no pressure on RBI. And look at the domestic scenario. Growth is not suffering, so you don't need rate cuts to support growth. Inflation is unlikely to drop below 4, given how prices are there of food and oil. So as long as it remains above 4, RBI really can't cut rates. So I don't see a scenario during the current year of a big rate cut in the domestic scenario. So from my point of view, for a domestic investor, right, I'm not sure that this is a good year for debt unless you're looking only at an accrual kind of return. I think equities is poised to do well, and gold also, I believe, given the international slowdown, the expectation of a rate cut by the Fed, and the fact that countries like Russia, Saudi Arabia, China, in addition to India, are shifting their exposure away from the dollar, and gold is a natural safe haven for them to park their monies. So I do think it's a sweet spot for both equities and gold in the coming year, and not necessarily that for debt.
Okay, now let me just come to the equity part, because it's 65% of your portfolio, up to 65% of your portfolio is going to be in equities. And as I understand it, the focus is going to be more on large caps. Now, I know that's the theme, that large caps are the ones that are going to fire this year. But having said that, the phenomenal increase in mid caps and small caps don't seem to have ended yet. Can you explain the rationale behind that?
Yeah, absolutely. So what's happening is that the last 6 months or so, you've had periods in September and October when FIS pulled out money from India. And then from November onwards, they slowly came in, and December they came in a big bang way. So because FII participation has not been generally great except for the month of December, domestic flows have tended to be diversified, and there has been buying by domestic fund managers has dominated the equity markets thanks to the strong growing SIP book and domestic flows. And hence, allocation by domestic fund managers has been focused on domestic-oriented stocks and sectors, and hence you've seen small and mid caps rally tremendously. From December onwards, with the clarity from the December 3rd state election results that the likelihood of the NDA government coming back to power, offering a policy continuity for 5+ years for a foreign investor, there's a significant change in outlook and approach towards India. This is strengthened by the fact that oil, thanks to the US lifting sanctions on Venezuela and Iran pumping more oil to finance the war with Israel through Hamas, you are seeing oil in flooded supply. So oil is also expected to be stable. One of the biggest factors for FIs to invest in India is a stable or a declining oil regime. With these factors positive, I do expect strong increase in FII flows at least till the election. So given that, I expect large caps to actually outperform mid and small caps. Now, that being said, doesn't mean that small and mid caps are going through a correction, because as much as 30% of your 17,000 crore SIP book is in small cap and mid cap funds, another 30% is a multi cap. So roughly half of the SIP book is actually coming and helping domestic fund managers buy small caps and mid caps. So while large caps must be rallying because of the FIIs, domestic fund managers have enough fuel and ammunition through SIP book to support the mid and small caps. So I believe that the tilt is that large caps will do better. It doesn't mean small and mid caps are going to cover. So I think a multi-cap portfolio tilted towards large cap is the best allocation option. And incidentally, our fund is also proposing to be 75 to 80% in large caps within equities, and it will use 20 to 25% of mid caps tactically and strategically to allocate to enhance returns to the investor. So I think this is a good long-term strategy to adopt, given that multi-asset allocation funds are a part of the hybrid category, targeting moderate investors who want long-term inflation-beating and fixed-income beating returns with a low risk. And I think that's the key part that we've got to bear in mind. I can't afford to load mid and small caps in this fund, which is in the hybrid category, right? I've got to bear in mind what is the kind of customer who's going to invest in this fund, and I think playing the middle ground is the best for